Wow. Let me let you in on a little secret. I actually saw an account blow because of no stop loss.
Ooh.
And at that, an investment account, a swing trading account. You can make as many comments as you want. I'm not going to tell you who the account is. That is for me, not for you to know. I'm not telling you. That's it. It's top secret. There's a lot of controversy surrounding whether you should average down or take a stop loss. And the main controversy comes from investors, the swing traders, the traders that are holding things for a longer period of time, or the investors that are holding things for a long period of time. But even if you're an investor, you should really consider having a backup plan. You should consider protecting the investment one way or another. Now I know you say that, it's long term, I'm thinking in 10 years, 20 years, that sort of thing. Gosh, I mean, I can't think that far ahead because I probably won't be around by then. Had I started when I was 17 years old, that would have been great. And I've had investments. I mean, I had an investment for 10 bloomin' years, man. And I literally sold it for the same price I paid for it. And I look at that and I think, surely I should have stop lost that thing years ago. Because at the end of the day, if you think about it, it's been bouncing around, going down, going up, and it never made me any money. For 10 years, I could have put the money in the bank and I would have made more money on that particular trade. What I should have done is stop loss that trade, even if it was even, taken the money out and put it somewhere more profitable, because I made a bad choice. I took that trade, or I made that investment based on what I thought was good fundamentals at the time. But then the trade invalidated somewhere down the line, and it was no longer a good trade. Why do you stay in it? Why did I stay in that trade, for example? I mean, a good example of an investor watching their trade go to zero was in South Africa. There was a company called Steinhoff that went from nothing to 80 Rand. It was the darling of the stock market. It was the darling of all the purchases. It went to zero. It literally went to zero. It tried listing in Frankfurt. They discovered all the anomalies and it just crashed. I owned that. And I can tell you, I was one of the fortunate ones that got out on the high. Very fortunate, because it went down so fast. It was incredibly ridiculous. And there were still people buying on the last day, but the only thing I can put that down to was all the short traders trying to get out of their trades as well, and balancing it up and that sort of thing. So it's absolutely crazy when you think about it. Hey, it's Rob Guilty, it's logical trading. Trading is risky. Don't forget, 80% of traders do lose money. So if you don't like losing money, be very careful. Perhaps don't trade. The controversy behind this whole thing is, why would you hold a trade and not have a stop loss? Because if you're a day trader, really, really important, I'm not even going to argue with you, there's no point in averaging down. You're going to lose, okay? Whether you're trading an index, whether you're trading a currency, whether you're trading a stock, a commodity, it really doesn't matter. If you don't have a stop loss on that on a day trade, there's a good chance that you're going to lose. You've got to at least have a one-to-one, a backup, right, on that. If you're a swing trader, also, you need a stop loss, because that thing can take you out, and especially if you're in gear trading. That said, if you're an investor, you might have some form of argument. But my argument to you is basically what I said in the beginning, is you hold a stock for 10 years and you don't make any money on it, and even if you do make a slight percentage on it, what is the point? What is the point of making nothing? You should have moved that into a decent company that would have made you lots of money, like a Coca-Cola or a Nvidia, or one of these great trades. Okay. The other thing is, you buy in it high, it crashes down. So what I say to you guys is, and the only thing I can say to you guys is, have a stop loss. It's really, really, really important to keep a stop loss. Manage your risk. The only way to trade is to manage your risk. Hey, do me a favor, check out the secret blog with my one trade every day. 10 seconds of your time, that's all. I got a secret blog, it's in the description, it's in the bio. Check it out. Every day I post a trade. For those of you who are interested in seeing what other people are trading and what's going on a daily basis, I post one of my trades there every single day. This is not financial advice, it's just a trading idea. Enjoy it. So if you check that out, hey, you don't need to know what you're doing. You can just follow the trades. It's so much easier, isn't it? But no, do yourself a favor. It's always good to see what somebody else is doing. Little secret, guys. Little secret. If you don't have a stop loss on all your trades, you're not gonna make any money. That's coming from me. You've got to keep and manage your risk. Look at what the trade is costing you, not what it's making you. When it's making you money, boom, brilliant stuff. When it's losing, that's what's important. How much is the trade going to cost you? Okay, look at that. That's it. End of story. I'll normally put my stop loss a little bit out, and then if the trade invalidates, I'll probably get out of it before it hits that stop loss. Because if a trade's going to go well, it'll normally go well before we even start. It's just, I have to tell you guys this because it drives me crazy. I started out my career believing that you didn't need a stop loss, and I would argue till I was blue in the face. You don't need a stop loss. It's crazy. Believe me, guys, you need to have a stop loss or you're gonna take more pain. Don't worry about the ones where you took the stop loss and it shot straight back up and you're like, oh gosh, there's the old revenge trade. Don't, just let it go. Because I can tell you now, 8 times out of 10, when you take the stop loss, you'll be so glad that you did. Believe me, you'll be so glad that you did. Strict stop losses are not necessary on investments, sort of emergency stop losses. But what I would say with investments is I would look at my trade, and if it's really invalidated and it's going nowhere, I'll look for a better trade. I'll take that investment and put it into something better if this is invalidating and it's not doing what it's supposed to do. For example, if you're in South Africa, let's say you've invested in Pick n Pay and it's just really not going well, it's just dwindling down, it's just not making you any money for years, okay? Put it in ShopRite. It's doing well, it's booming. Put it somewhere where it's going to make you some dosh, man. Move it over and leave it there. Because you know that one's going to do better. You know that one's going to do well, but you've got no guarantees on the original one. On the original one, it could go to zero. Okay? Because your initial plan has invalidated. It's no longer valid. That's what I mean by stop loss. But on a day trade, stop loss is, hey, it's going the wrong way. Just get out, move on. You know I trade support and resistance. You know, if you've watched my videos, you know that I'm a support and resistance trader. And you can go and have a look at my system right here. I'm going to show you how to trade my system. Less than a minute. Hopefully less than a minute. Let's see. Starting now. So what you do first is you go to the higher time frame. Then you look for a support and resistance area. You change it to a line chart. Easiest way, because with a line chart you can see the points better, right? Draw your support or resistance in, and then simply, it's normally a resistance if you're going short, so then you simply change it back to the bar chart, drop it down to the lower time frame. I prefer the 4 hour or the 1 hour depending on the day, and then you can see where your price is going into your resistance, or in some cases where it's going into your support. If it's going into resistance and you want to go short, then you'll be looking for a red bar coming out of it. If it's going into the support and it's going long, you'll be looking for the green bar going out of it. A confirmed bar, not just halfway through the time. It must confirm, it must move on to the next bar and give you a confirmed bar. You can look at your bars as you get long green bars, those are positive signs, long red bars, nice negative signs, tails on the bars will tell you that the sellers are getting out or the buyers are getting out and that sort of thing. That's my system, and that's about as simple as it gets. It doesn't get much simpler than that. So for me, getting in and out of a trade is really based on that support and resistance. If it breaks the wrong way, stop loss, invalidate it, get out. So that's it from me today. It's the end of the day and I'm sort of done and I'm out of here. So guys, don't forget, like, comment and subscribe, perhaps follow in some cases, leave a comment, and don't forget, don't ask me in the comments who lost money. No, don't ask. But thanks for watching, till next time, bye.